Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made.
All right, welcome back to the Equity Channel Deep Dive. Today we're going to be looking into something pretty interesting. Forbes' S&P 500 buy target for 2025.
Yeah, he's the chief investment officer over at the Equity Channel Index, and he's using this method called PVGO to get there.
Okay, PVGO. That sounds a little technical.
It is a bit.
Can you break it down for us? What's PVGO all about?
Sure. So PVGO, it stands for Present Value of Growth Opportunities. And basically, it's a way to look beyond just, what a company is earning right now. It's trying to figure out how much those earnings are actually going to grow in the future.
So not just a snapshot, but kind of looking ahead.
Exactly, yeah. And, Duran uses this to try to figure out what he thinks the whole S&P 500, what it should be worth.
Okay, so he's using it to come up with this target.
Right.
So how do you actually even calculate that? I mean, we're talking about hundreds of companies in the S&P 500.
It gets pretty complicated. There are a lot of moving parts. But, the basic idea is you're projecting those future cash flows, and then, you have to discount them back to their present value.
Right.
And a company that has a lot of room to grow, that's going to have a hhigher PVGO.
Makes sense.
So Duran, he's basically done that for the entire index for all the companies in it.
Fascinating. So with all that in mind, what's the magic number? What does he think it's going to be in 2025?
Well, he's put the target right around $5,700 for the S&P 500.
$5,700. That's a pretty big drop from where we are now, isn't it?
It is, yeah. We're talking about a potential drawdown of, about 6.7% from where we were recently.
Oh, wow.
And that puts us, pretty close to what they call correction territory.
Yeah.
And on top of that, there's this thing, it's called negative gamma exposure.
Negative gamma exposure.
Yeah.
Okay, I'm going to need you to break that down for me.
Yeah. Sure. Basically, it means that as the market starts to go down, some of these, big investors, they're forced to sell their holdings to kind of manage their own risk.
Right.
And that selling just pushes prices down even further, which then, triggers more selling. It kind of creates this snowball effect.
So it's not just a normal dip.
Right. It can really accelerate downwards.
I see why that's something to be aware of.
Yeah, definitely.
But I got to think too, doesn't that also create kind of an opportunity?
It absolutely does. Yeah. When the market kind of overreacts like that, that's when you see these buying opportunities emerge.
Right.
Suddenly those stocks that are trading below that $5,700 mark, they start to look a lot more attractive.
So for those who are, brave enough to kind of buy when everybody else is selling.
Yeah.
That's when you might see some real upside.
That's the idea. It's recognizing that value when everyone else is, kind of running for the hills.
Interesting. Now, one other thing I noticed in the source material is they were talking about how the market is already trading on 2026 projections.
Yeah.
What's that about?
That's just how the market works. They're always looking ahead, these investors. They're always trying to, anticipate the future.
Right.
So they're already taking those 2026 earnings estimates and baking them into the prices that we're seeing today.
So they're kind of already pricing that in, trying to get ahead of the curve.
Yeah, exactly.
Interesting. So what are those projections actually saying for 2026? What are they expecting?
Well, it depends on, who you talk to. There are a few different sources out there.
Right.
But it seems like the general consensus is somewhere around, $315 in earnings for the S&P 500.
$315. Okay.
That's kind of the ballpark.
So that's what they're thinking, way out there.
Yeah, but, we got to remember, these are just projections. Things could change.
Oh, absolutely.
Who knows what's going to happen between now and then.
Yeah, that's a long way out. Now, one other thing I wanted to ask about, they mentioned this number, $6,200, and they called it a frothy level.
Yeah, that's right.
What does that even mean?
So frothy, basically, it just means that, at $6,200, things are starting to look a little overheated. Valuations are getting stretched, kind of like what we saw back in, the dot-com bubble.
Oh, okay.
And if it gets to that level, companies are going to have to deliver some really exceptional growth to actually justify those prices.
So it's kind of a warning sign.
Yeah, you could say that.
Now, given all this, given everything we've talked about, Drawn, He seems pretty sure about this target.
He does, yeah.
Is he confident that the S&P 500 will actually hit that $5,700?
You know what? He's actually more worried about it going even lower than that.
Oh, wow.
He thinks there's a chance, maybe a correction down to like $5,500, or even, he says, maybe even a full-blown bear market that could take us all the way down to $5,100.
That's a scary thought.
It is.
I mean, what would a drop like that mean for, everyday investors?
Well, I mean, think about it. A bear market like that would basically wipe out most of the gains that we've seen since like 2021.
Oh, wow.
Yeah, I mean, that's 3 years of basically zero growth. It's like we're just treading water.
And he's worried that people are celebrating right now.
Yeah, he's worried that they're celebrating these gains without realizing that, they could end up with nothing to show for it.
So he sees a real disconnect between the market's kind of mood and the potential dangers.
Yeah, he does. And he's, especially concerned about what could happen to Main Street if this all comes crashing down, especially, with like unemployment going up and the economy slowing down.
Yeah, it's a pretty sobering thought. So what's the bottom line here? What should our listeners be taking away from all this?
Well, I think the main thing is just to be prepared, Don't let fear make all your decisions, but don't get complacent either. And, keep Duran's warning in mind. He always says, be greedy when others are fearful and fearful when others are greedy.
Yeah, that's good advice. So
Yeah.
basically, if the market does start to dip down toward that $5,700 target,
Yeah.
maybe that's the time to start looking for some bargains.
That's exactly right. That's when you can really use this knowledge and make it work for you.
All right. Excellent advice as always. Well, that's it for this deep dive, everyone.
Don't forget, every time we drop a new episode, money is made.
So make sure you subscribe so you don't miss the next one.
See you then.